This is literally where Bitcoin was sitting before Luna collapsed last year. We all expect something's coming against Binance, right? Right now, it's hard not to be bullish on the Solana ecosystem. It feels like the Ethereum ecosystem felt right before the last cycle.
Today, I interview crypto analyst Scott Melker, host of the Wolf of All Streets podcast, and I ask Scott the tough questions. What trend are you most bullish on for 2024? Why Solana over Cardano? Where does Ethereum hit top of next cycle? As well as investing lessons. What's a piece of advice you have for crypto investors in 2024? Maybe something you've learned. And the truth about the biggest villain in crypto.
The very cop on the beat who's supposed to be protecting them is pumping and dumping these coins in price massively with his words.
Like the video, send this to a friend, and let's start. Why is Bitcoin pumping now?
I think everybody's front running the Bitcoin spot ETF news. I really do think it's as simple as that. Because if you even look at the 4-year cycle that many people believe in, we're kind of rallying a bit too early, right? So I do think that this is coming off of a fundamental catalyst of the belief that we're going to see that approval by the end of the year, maybe by January 10th at the latest. I have no inside information beyond the people that I talk to and what I hear, but I talk to Eric Balchunas and James Seyffart pretty regularly from Bloomberg. They're the two experts. They've put themselves on the line here and said 90% chance of approval by January. I tend to believe them. I think there's a lot of pressure, obviously, on Gensler to get this done. I think he would face a lot of lawsuits if they don't find a way to do it. So I think people are really just front running that news. And now that Bitcoin is rising to these higher levels, we're starting to see that old bull market cycle where the money flows into altcoins and you start to see these massive pumps there. Because interestingly, we didn't see that at all, even as Bitcoin ascended from 19 to 20, 20 to 25, 25 to 30. It really took making that yearly high and pushing up here 35, 36, 37 to see these massive altcoin runs. So it feels right now like the bull markets of old, where you get sort of the cycles and the money flowing from one thing to the next. I'm enjoying it. I don't know that it'll last forever. It never does. So I think that this is just a great time to be in the market.
So, and if often markets sort of inflict max pain in the short-term sense, and pullbacks are a part of any bull market or any bear market, now that everybody is bullish, is it time to take profits?
It's always time to take profits, at least a little bit. I think people think too binary: bull, bear, buy, sell, buy all at once, sell all at once. I think if you've been here for a while, the minute you start feeling FOMO, sell 20% of that position, right? Don't take the whole thing off. It takes more pressure off you emotionally when the position gets smaller. Even if it rises, I know you'll feel like you could have sold the top or bought the bottom, but nobody can expect to do that. So I do think, especially coming into 38,000 for Bitcoin, it's a reasonable place to take some off the table, wait and see what happens. I mean, it's a really critical level. Think about what 38,000 means, right? First of all, everything's overbought. We're up over 2x from the bottom, but this is literally where Bitcoin was sitting before Luna collapsed last year, right? So a move above 3840, this area, is basically erasing the entire contagion of the 2022 bear market, saying that Bitcoin has recovered. It's recovered from Luna, Voyager, Celsius, BlockFi, FTX, name every other platform. It's a level that a lot of people were sitting at before it dumped. A lot of people looking to take profit, and a big statement, I think, to get above it. So I'm not surprised. But again, what I find interesting is now that we're at these levels, you're seeing these altcoin moves. I think there's a lot more confidence in the market in general. But you talk about a flush out or a drop, you always get these 20, 30% drops even in a bull market, right? But what did we see literally on November 9th? We saw Bitcoin hit 38, immediately drop to the mid 35s or 36s. But altcoins, some of them literally dropped 20 or 30%. But it happened in a matter of minutes, and then they bounced. If you want a real indication that you're in a bull market, it's how fast those retracements happen. You literally got your 30% dump on some of these coins that a day later are trading higher than when it even happened. Just really astounding price action. You've got to be there with your bids already waiting if you're looking for those corrections, because they can happen now in a matter of minutes.
In a lot of ways, Bitcoin is inevitable. The adoption is happening. It's in a different league. But at the same time, Ethereum is nipping at its heels. In the last week, BlackRock has officially filed for a spot Ethereum ETF This is sort of institutional adoption that crypto holders have like just dreamed of. We've only talked about the last multiple years. Does this change your outlook for ETH, meaning make you more bullish?
It does change my outlook for ETH. Listen, we've already had Ethereum spot ETF applications filed, but it's different when it's BlackRock for a few reasons. Number one is that Larry Fink has been on a roadshow talking about crypto as a flight to quality. And the Bitcoin maximalists screamed and yelled that he was only saying crypto because he legally couldn't say Bitcoin. The SEC would come down on him if he was talking his own book. That's completely dispelled. We now know the truth, which is that Larry Fink is in fact bullish on all crypto. And when he says crypto is a flight to quality, he means it. If you were paying attention before, you already knew that, because in his annual investor letter last March, he wrote extensively on the tokenization of assets, on these other crypto assets beyond just the Bitcoin spot ETF that they had filed for. So when it comes from BlackRock, you can say that Larry Fink is one of the top 5 probably most powerful people literally on the entire planet. People joke that there's 4 branches of the government: the executive, judicial, legislative, and BlackRock. I would say that there's just BlackRock and maybe the other 3 are subsidiaries, right? I don't think people understand just how impactful BlackRock is and just how powerful his words are. So as for Ethereum, I've been really beating the Ethereum drum over the past month or so. Throughout the cycle, I've always kind of been an Ethereum bull, but I've written 3 newsletters on it in the last 2 months saying that this is irrational FUD. It's way beaten down. People aren't looking at it. It will have its moment in the cycle. Last week, I literally wrote a newsletter called The Most Hated Asset. And I made the case that Ethereum right now was more hated than even Hex and Doge and XRP and all of these others. And then maybe 2 minutes before we got the Ethereum spot news, I wrote a bunch of Twitter posts saying, hey, this is only the 4th time in history that Ethereum versus Bitcoin has been oversold on RSI. Just basically making the case very clearly that I thought Ethereum was going to have its moment. I didn't think it would have its moment 10 minutes later. That was complete luck. But I do think that this now is extremely bullish for Ethereum. And if you follow that logic, it just takes you further with time down the risk curve to what BlackRock will do. I mean, BlackRock, they're the kings of indexing, right? I mean, that's literally what they do. They create ETFs, they create indexes. Would you be surprised if we get a Bitcoin spot ETF, 6 months to a year later, you get an Ethereum spot ETF, then you get a top 10 crypto index ETF. And then one day when we're in a bull market, you get a DeFi ETF. I'm not saying these things will happen, but if BlackRock's making money, they're going to continue filing for these products, and so will everybody else.
Yet an Ethereum spot ETF cannot happen without the SEC, Gary Gensler's approval. You've been very vocal. Fire Gary Gensler. Why?
I think that no individual has done more damage to retail investors than Gary Gensler, and his very mandate is to protect them, right? We all know he didn't protect anyone from FTX, Voyager, BlockFi, any of these, right? So you can give him a pass on that. You can say he didn't know. You can say some of them were foreign entities, but he was working directly with Sam Bankman-Fried to work on legislation and regulation. So listen, I mean, where there's smoke, there's usually fire. I think he was embarrassed by FTX and has now gone scorched earth in the other direction to basically compensate for that. We also all know factually at this point that, he was a plant from Elizabeth Warren, and she has people in the White House, and she happens to be the most powerful person in legislation, in finance, in the Senate, right? She's basically the one who's giving the directives. And so he's going to keep doing what he's doing until it becomes so politically unpopular that she tells him not to. And we all know that she's still raising the anti-crypto army, pushing for, the false narrative of Hamas terrorist funding, all of these things. So I think if you look at it rationally, GBTC has been an inferior product for years. It had a 50% discount. That was the only way that your average retail investor could gain exposure. The Bitcoin futures ETF was the most popular ETF in history ever launched, the fastest to $1 billion. I think it was less than 48 hours. There's a thirst for these things. That futures ETF was so popular that they couldn't actually buy 1-month contracts to fill it. They had to go out to 2, 3, 4 months, which means it's not tracking the underlying asset. It's not tracking the actual price of spot, and has underperformed spot. So the best way to protect investors, obviously, is to approve a Bitcoin spot ETF. Fees go close to zero, and people get a safe way. I think you should self-custody your Bitcoin, but people get a safe way to gain exposure to this asset. Now, take another example that I've been talking about a lot lately. Just yesterday, Gary Gensler said he thinks it's a perfectly fine idea to relaunch FTX. Okay, fine. Take that at face value. But what did that do to the market? Okay. I'm not even going to argue how absurd the notion of him saying that is, but it sent FTT up over 100%. It's up a couple 100% in a matter of days, effectively on that news. What happened when they filed their cases against Coinbase and Binance? They passively, without ever attacking the projects directly, just named a whole bunch of assets as unregistered securities, right? I think the list got up to like 55 of them or something, just passively named in these suits. So what did you see at that time? Matic, Cardano, all these had been listed. They went down 50, 60, 70%. American investors are holding those assets. The very cop on the beat who's supposed to be protecting them is pumping and dumping these coins in price massively with his words. Is literally doing the dead opposite of what his mandate is as the chairman of the SEC. So listen, even if you don't want to fire the guy, I actually believe that the proposal that Warren Davidson has to make it a committee so the chairman has a bit less power and it's measured and they vote and they come to a consensus and decide on these things would make a lot more sense. Hester Peirce is very reasonable. She's been leading the charge from the other side of the SEC. Sadly, the SEC historically, I think, has been an agency that has done a great job to protect investors. It's just that this SEC is activist and taking this, regulation by enforcement approach. And even the rest of the SEC doesn't want him to do it. So I think it's very clear there are a number of reasons that he needs to go. The good news is eventually he will.
Let's say top of next cycle, Bitcoin hits over $120,000. That would be outrageously great. Some people say more, some people say less, but this question's just for fun, but your best projections, where does Ethereum hit top of next cycle?
Oh, man, that's a tough one.
Just for fun, fun. Nobody knows.
Yeah. Well, there's nothing that makes you look dumber than trying to take out your broken crystal ball and making predictions, especially when they're time-based, right? So
for sure,
I try to avoid it, but I will say that I thought it was going there last cycle. So that should tell you my credibility. I, like many people, thought, hey, we broke 65. Bitcoin's at 69. It just made a new high. It's going to take the elevator straight up to 100, right? It obviously didn't. So, and I thought Ethereum was going to 10, right? So I think that if Bitcoin goes into 120, 130, I would expect that we could see Ethereum, at 10,000, something like that. But it would not surprise me to see it much higher. It's like now I want to give a conservative estimate so I don't look dumb. So I'm just going to say 10 instead of 25, which is dancing around in my brain. But I don't know that it gets to something like 25 in this cycle. But I am, I'm very bullish on the next cycle. I think that humans are going to human. They're going to pump these things. They're going to, speculate and get excited, and it's going to happen all over again.
What trend are you most bullish on for 2024 in crypto? For example, gaming, there's a new thing called DPIN, L2s. What are you looking at?
Right now, it's hard not to be bullish on the Solana ecosystem. It feels like the Ethereum ecosystem felt right before the last cycle. I haven't honestly participated so greatly in it, but I do think that those competitive L1 narratives are going to be compelling in the next cycle. I think the things we're seeing right now are the first little iterations of what we're likely to see when we go into a full-blown cycle. I also think that narratives of past cycles are going to really start to play out now and in future cycles. So humans obviously have this habit of being really early on their expectation of what's about to happen, but then being really slow to understand the exponential growth when it finally does happen, right? So DeFi summer, Metaverse fall, NFTs, all of these things, people expected them to gain mass mainstream adoption overnight. That never happened. So I think we were a cycle too early on all of those things. So I think we'll see a more mature version of all of the narratives of past cycles starting to really proliferate in this next cycle. But some of those could take one or two more cycles, right? The thing that I would say most compelling, I don't know if it's as investable. I don't know there's a coin you can buy to take advantage of this, but I do think the tokenization in real world assets after all of the chatter of previous cycles is really coming to fruition now. You have major institutions doing this now. Like I said, I don't know how you invest in it necessarily, because a lot of it, I think, will happen on private institutional blockchain. So it's more of an adoption of the underlying technology than necessarily Ethereum blows up because of it. You see JP Morgan Onyx, and you see BlackRock settling a tokenized money market fund with Barclays in real time for minimal fees and being able to use that as collateral. I mean, we've been screaming about that's what we were talking about for NFTs in 2018 before there were even PFPs and all of the madness, right? So I think the real fundamental use cases are going to start to come to fruition. I don't think people realize asset managers with multiple trillions under management, like Franklin Templeton, right? For example, I talked to Sandy Call from Franklin Templeton. She's one of my favorite guests to have on the show. She gets me so excited and bullish about what institutions are doing. They've already tokenized $300 million. That's a drop in the bucket, but $300 million of treasury bills are tokenized and actively trading right now. And that's a billion total AUM market. Maple Finance has tokenized quite a bit of treasury bills, but these are like United States T-bills on a blockchain that you can actively trade from one of the largest asset managers in the world. Now, you can tell me that they're just dipping their toes. Maybe they just want to be there in case it does happen, but these are real institutions spending real money and real resources to explore these things. And it's not just doing research. They're literally doing it, right? I don't care what Jamie Dimon says. I'm looking at what he does, right? And JP Morgan is very, very active in the crypto space and in tokenization. So I think that would be a huge narrative. I do think that gaming really starts to come to fruition. I think that we've had a problem with gaming where we don't have adoption from an existing AAA game of any crypto, and we haven't been able to build a real AAA game within crypto or on the blockchain. So when one of those two things happen, I think that'll be the catalyst for what really sends the gaming side going. I've been to a few conferences this year. There are some pretty serious games being built natively for blockchain. So I do think that will happen. But once again, like the best AAA games take hundreds of millions of dollars and, probably close to a decade to develop. So it was really kind of nonsensical for us to think that that was going to happen immediately in the last cycle. But DeFi happening, gaming happening, NFTs very much happening, but I think it'll be more with tokenization of real world assets.
But you're most bullish on alternative L1s. Specifically, you love the Solana ecosystem. Why Solana over Cardano, for example? Like, define it for me.
Well, that's hard to define. To be quite honest, I interviewed Raoul Pal and he got me so excited about Solana that my brain felt like it was going to explode. And I was trying, but I didn't buy, right? But and so like I was trying not to FOMO. But and then Rand Neuner obviously is my partner on Crypto Town Hall. He came on live from Solana Breakpoint. There's 3,500 people here. They're not retail. They're developers. This is really building. There's true interest. There's AUM flowing in. I just think that, even if none of that's true, narrative drives everything in crypto. So if that narrative even exists, then that's probably enough to continue sending it up. But, speaking to Raul and then doing a bit of due diligence on Fire Dancer and what's happening there, if the promise of what they say they can do actually comes to fruition, I know that's in testnet now, but if they can do millions of transactions per second, then it really is a game changer, especially if they can actually do that in a secure manner without downtime, because we all know their history. So listen, I view all of this as speculative ideas, to be quite honest, right? My view on crypto has always been there's Bitcoin and everything else is like a speculative VC investment, but that's fine, right? It's totally, Definitely. That's fine. They're just not trying to compete with Bitcoin. So get over it, and that's always been my view. But if they can do that, I think that they can capture a ton of the market. I've had Anatoly Solana on a number of times, and I flat out asked him probably a year ago, I said, are we going to live in a multi-chain world, interoperability, these narratives, or can we go full Lord of the Rings and have one chain to rule them all? And he was like, oh, we can do it all, like flat out. And I didn't know if that was hubris or ego, or he knew what was coming with Fire Dancer, but he's the first founder or like developer that I've heard flat out make the claim that what he's doing could dominate it all. So talking about Cardano, I don't have a feeling on Cardano at all. I don't know that that's going to piss people off. We all get attacked by their army, but I buy into the idea that they're trying to do it the right way. I've spoken to them. I've spoken to Charles. I think he's brilliant. I buy into the idea that they're taking their time to do it right. But that makes me fear that it's going to be even more, we've been hearing that for cycles. So I think it's one of those things in this space, just show me, like when I see a killer app come out on Cardano with meaningful traction, I think that will be really, really exciting. And listen, I'm still bullish on the idea of L2s as well. I think that Coinbase with Base, I think that's really compelling. We've seen, listen, I don't really care about friend tech per se, and I certainly wasn't trading Bald, which was locked on there or whatever had happened. But I think having a company like Coinbase disrupting themselves with a decentralized technology and doing it without a token, I think that's a roadmap for things that other companies could do. We know Kraken is now looking to do something like that. Man, I think we're just at the point now. It's interesting. In previous cycles, I think there wasn't enough block space. There wasn't enough speed. There wasn't enough of any of it for any of these wild, outlandish ideas that we had. Now it's like it's all built and the house is empty, right? It's like San Francisco commercial real estate right now in crypto. So now we need somebody to actually build a killer app that the people want to use, right? So now I think it can all probably scale for mainstream adoption for the first time. Now we need mainstream adoption, right? We need people to actually care and use it.
And as those people come in, the mainstream gets turned on to crypto in this next year. What's a piece of advice you have for crypto investors in 2024? Maybe something you've learned.
Dollar cost average into Bitcoin and forget about the rest of it unless you've done your research and you're a sophisticated investor. As excited as I can get about all these things we're talking about, I literally took a look at it the other day. If you started buying Bitcoin at 69,000, your first buy was the all-time high, and you bought $100 every single month, once a month. Since then, you've spent $10,000 as of October 31st. It's higher now. You spent $10,000, your portfolio is worth $13,300. So just consider that. If you dollar cost averaged into Bitcoin on the literal worst day in history to start, you're up over 34% on your dollar cost averaging in a market where you saw 16,000, sub 16,000 Bitcoin and still are over 50 or roughly 50% off the highs. And the reason is when Bitcoin goes parabolic, it's really not for that long in the context of all of the history of time. Bitcoin spends most of its time in accumulation at the bottom after a cycle high. So you're gaining the benefit of buying those highs. So even if you're buying now or you start at 50 and it goes back down to 30, whatever it is, it's a lesson from any market in the past. You just buy the strongest asset. Bitcoin, we all know, is kind of like buying SPY. It's like an index fund of all of crypto, right? Until we really see them untether and the cycles change, Bitcoin is like buying exposure to the entire crypto market. Now you can go further down the risk curve and find other ways to do that. I think your next step after that is start dollar cost averaging into Ethereum. After that, maybe start dollar cost averaging smaller into Solana, 70%, 20%, 10%, something like that. And then when you become a degen like the rest of us, you start really speculating on this other stuff, but with a very small part of your portfolio. So I would say that the lesson I've learned, unfortunately, as excited as I am about all these things, is it's Bitcoin is still king. And a 30% return in 2 years is really good when you've been in a bear market, right? So imagine how good all those buys you had at 18, 19, 20 when you were dollar cost average, you're going to look if we do get to 100 and 120. And I learned that, by the way, by dollar cost averaging from the dead top of SPY in the Great Recession. I was completely broke. I was in debt until like 2007, 2008. I've told the stories countless times about all the times I got washed out in markets. But I was a DJ at the time, and I went on this huge tour in Japan in 2006, and I finally got paid like real money to do my job. And I was like, in 2007, it's time for me to really start investing now that I have money again. I started dollar cost averaging into SPY almost at the dead ass top. And I was so underwater. I mean, I was like, one of those old school guys with the big helmet, with the, like just absolutely scuba diving. And I was underwater for 7, 8, 9 years, but I just kept passively every month buying SPY. By 2018, 19, every month it was making a new all-time high, and every one of those buys was up many multiples. So it's just the way you invest in markets. That's what I would say to new people. Absolutely. Just buy Bitcoin and start to understand it before you go any further down the risk curve.
And final couple questions before I let you go. You've been doing interviews all morning. It is suspected that the CFTC is coming out against Binance and maybe the SEC combination. What's your outlook on Binance in 2024?
It's a tough one, but I will say that it's only getting more positive. And that's not necessarily for Binance, but that's for the market. And I can explain why. So when the action came out first from the SEC against Binance, and we started getting rumors that there could be DOJ enforcement action, like you said, CFTC. Basically, every agency in the United States with a couple of letters is in some way looking at a civil or criminal investigation at Binance. Binance was the market. I won't even say Binance was a huge part of the market. It's like Binance was the market, right? 70, 80% of volume was on Binance. Now, I think it's exceptionally sad what the SEC with that enforcement action did to Binance US, right? Because they were immediately unbanked. Everybody ran away without any due process, without proving anything, and they effectively killed Binance US and sent it to zero. You can't trade on there. You can't get your money off on a bank account. You can only send it. I thought that you were, innocent and proven until proven guilty in this country, and they literally killed the U.S. side of Binance without proving a single thing, right? So that's very sad. But the upside of that, and what we've seen with other countries kicking Binance out, which I think is also unjustified at this point, is that Binance has become marginalized. So it's very bad for Binance as a business, but as their percentage share of the market drops, as their percentage of the volume drops, the impact of anything that is to come for Binance becomes progressively more priced in and progressively less damaging to the market. So if Binance is 10% of the market by the time the DOJ comes out, is anybody really going to care? No. And is anybody at this point, whether rationally or not, we all expect something's coming against Binance, right? So that's the kind of things that you see priced in. Literally just this week, CME, which is the institutional trading, platform for American institutions, surpassed Binance in futures, open interest, and volume. That's crazy. That is crazy because on the one hand, it's two things intersecting, right? It's Binance's decline and institutional interest incline crossing at that point. That's a flippening, right? I don't care if Ethereum flips Bitcoin. Institutional futures flipping Binance is a really, really big deal. So I don't know what will come. I'm not a lawyer. I've never looked into Binance's business. Like my gut feeling is that much like Tether, a lot of these companies did sort of sketchy or shady things at the beginning when there was no roadmap, there were no regulators watching. And then they probably cleaned up their act massively when the spotlight was on them. Like I can't imagine that Binance is doing the things they were doing in 2018 or 19 now with everybody watching. I mean, CZ's like on a roadshow doing selfies and talking to regulators around the world every day of his life. And you've seen the attestations of Tether, for example, right? So was Tether not fully backed at some point in the past? Probably, right? Maybe that wasn't even nefarious. Maybe they were just learning, right? Are they fully backed now? I'd be pretty confident that with every regulator in the world looking at them that they probably are. So the question is, will Binance survive the sins of their past if they exist, or are they doing those things now? But I think that the market now has priced in most of the potential massive FUD. Tether, Binance, DCG, I say are the three shoes that could still drop for the industry.
And final question, say you've already got your Bitcoin position, you've already got your Ethereum position. I give you $1,000. What are 5 altcoins you take a flyer on into next year? Feel free to use.
Boring. I'm so boring. Fine. Yeah, I'm so boring, and especially if I'm in an interview, right? But so listen, I avoid meme coins. I'll trade them every once in a while, but I certainly wouldn't talk about them. But listen, I think, and this is a point that I sort of made in the last cycle as well. I think the safest way, if you're new, is you're unlikely to pick that one project that's going to be the project of the next cycle that pulls 1,000x, right? That's very hard to do. Even the people who do fundamental analysis usually miss them, and then you usually buy it too late at the top and you get completely destroyed anyways. But the way that I think you can capture that value to a very lesser extent is just to buy the layer ones and the layer twos where these things are being built. So it's kind of the infrastructure play of crypto, right? Like buy some Solana because a bunch of stuff will probably be built on Solana. Like I happen to have been Multiverse X, E-Gold, Elron, call it what you want. I've been literally since it was like 10 sats trading against Bitcoin on Binance. So I've been a huge fan of what they're building. I like them a lot, but choose your fighter. But I think that if you invest in the layer ones, the Maddox, the layer twos, right, and get a little piece of each of them, that some of those are going to win. And even if some of them end up not winning, you'll catch enough upside from the ones that do. But then like if one of them becomes the gaming chain, or if one of them becomes the DeFi chain, or one of them captures the entire NFT market, you're going to benefit massively from that without having to buy the NFT that goes up 1,000 times, right? So I can't tell you what five, for me, off the top of my head, Eagle, Solana, AVAX, then we got Bitcoin, Ethereum, obviously. If I got to be a DJ, maybe I buy a little Doge just because, Elon Musk might talk about it again. And Doge, as much as I've always been like a Bitcoiner and stuff, Doge really is what got me exceptionally interested in trading crypto. I came in as a trader in 2016, but my friend Christopher Inks showed me the Doge cycle, which you'll remember, right? It was like the waves. You would buy it at, first of all, you didn't trade it against dollars or USDT. It didn't exist. It was a Bitcoin only pair. And you would buy it between 15 and 25 sats. It would go to 120 or 180, come down. And then, 2 months later, it would do it again. So you just bought it every time it came down. You made like a, 15x and it would come down. So I sold all my Doge when it got to a penny. I was like, this is insane. We can talk about this in dollars. I couldn't believe it. And it went to 70 cents, of course. Like my wife's favorite joke, whenever she's mad at me or just wants to poke fun, is like, yeah, you traded all that Doge to make like 20, 30 grand over all those years. How much would it be worth if you had just held all that? And I'm like, $60 million, but I don't know better. So I think there's a place in my heart for Doge because it's the original meme, and I think it has accrued a real value and following as a result. But yeah, I think just buying the infrastructure, buying the layer ones and layer twos that you believe in, you can probably capture a lot of the value without having to identify the single winner.
Scott, such sound advice, man. The link for your stuff, your Twitter, everything is down below in the video description. I encourage the audience to check it out. Final thoughts for the audience.
Man, I'm just honored to be here, to be honest. And I do think, for final thoughts, it's really early in this cycle, I think. I don't have predictions for where price is going to go, but I would say don't start losing sleep right now. Don't start refreshing your portfolio app at 3 o'clock in the morning to see what the price of Bitcoin is. I think it's very, very important to take your time, make good, pragmatic, sensible decisions, be slow, continue to dollar cost average. Just because Bitcoin chills for a second doesn't mean you need to buy Rocket, Pepe, Doge, Inu, whatever, just to make gains. You're going to make money if you just stay solvent and remain here. Don't use leverage. There's my number one piece. Don't use leverage. Avoid it. You don't need it. This is already a volatile asset class. But really, I think that we've got years. Looking at the 4-year cycle, which to me is if it ain't broke, don't try to fix it. Maybe it'll be different this time. It very well could, but prove it. That means 2025 is the big year, right? I mean, it's 2023 right now, last time I checked. So I would just say, don't get FOMO. Don't freak out. You've got plenty of time to do this. Still invest what you can afford to lose. Really, the basic things you would tell any investor, I think, are still very important advice here at this point. I mean, we'll see what happens, but I think we've got a lot of bull market to go.